The broadcast is now starting. All attendees are in listen-only mode.
Hi, Sandy, Vicani Insurance Agency Marketing. Thank you so much for attending this webinar this morning on Single Premium Life with Baltimore Life. Just so greatly appreciate it. Again, my name is Sandy. I head up the Life Division here at IAMS. And again, thank you for taking time out of your schedule to attend just a really important webinar and how I believe you should really have Baltimore Life as a company that you utilize, especially for single premium life. A few housekeeping items that we'll go through real quick before I hand it over to Gary Voith with Baltimore. Here at IAMS, we have something called an IAMS Business Builder. And what that is when you refer an agent over to us and that agent gets contracted, we send you a $50 check as a thank you. When that agent writes and places business with IAMS, we send you, or you get actually 20 basis points on each piece of placed business from that point on. That is indefinite. That does not come out of your commission. It does not come out of that agent's commission. That comes from IAMS as just a big thank you actually for entrusting us with that referral. For all agents, we have something called a marketing reimbursement account, and it's kind of similar if you think about it to like a business savings account. And what it is for every $100,000 of placed business, whether that's life, annuity, med-sup, combination thereof, we put $100 in that marketing reimbursement account. And what that is that continues to grow. It carries on and over each year until you're ready to use that. When you have a business expense, whether that is a computer, or you purchased a seminar or a website, whatever the case may be, go ahead and submit that invoice to us. We pay up to 50% of that invoice as long as that much money is in your account. We also have something for our brand new agents. So in your first 6 months of getting contracted with IAMS, if you place $100,000 with us, you can choose a 2-year producer website that we create and manage for you, or you can choose a $750 cash bonus. If you'd like to hold off and you think, gosh, I'm going to place $300,000 of business with IAMS in my first 6 months, you can choose a $1,500 Visa gift card, $2,000 in a marketing reimbursement. Is that business savings account that I just spoke about? We'll put $2,000 in there for you. Or you can choose a Social Security program and 3,000 piece mailing. If you'd like to hold off and you think, gosh, I'm going to go gangbusters here and place $500,000 with IAMS in my first 6 months, you can choose a 4,000 piece mailing and seminar coaching with a top producer of ours, Dave Pemper, a 5,000 piece mailing and seminar coaching with another top producer of ours, Matt Gill. Or you can choose my favorite, which is the Ritz-Carlton Travel Rewards Getaway, where you plan your own destination. And again, this doesn't come out of anyone's commission. This comes from IAMS directly. And again, big thank you for placing your business with us. And in order to place that business with us, you need strong back office support. And we just truly believe that we have just the top in the industry. And so what we do is we try to save you time from the very beginning. And that's by setting you up on the paperless contracting system. And what we do there is we send you out the forms. You circle any carrier or carriers you're interested in getting contracted with. You send that in, we get you contracted, and we set you up on a paperless system. So anytime in the future you'd like to get contracted, just give us a call and we'll go ahead and get that completed for you. We also do case design assistance and help you decide what's the best carrier for your client. We run your quotes, whether it's life or annuity. We send you out forms, new business or customer service. Out of all of this, what I believe is just truly important is the submission to commission. And what we mean by that is when you submit a piece of business to us, we scrub that application from top to bottom, make sure nothing is missing, give you a call, let you know we received it, gather any missing information that we may need, order any exams and labs, and submit it to the carrier that same day. And then we follow that piece of business. Every 3 days we're touching that to make sure that it's staying on track and issued and placed and commissions paid just as quickly as possible. So if any of you, this webinar, for example, sees you see our webinars, you see our life and annuity book, our newsletters, anything like that, our creative team here at IMES creates all that. They do an absolutely amazing job, whether you're speaking to Jacob, Andrew, or Aaron. We can help you with different handouts and flyers. If you don't have a logo design and you need one, we can get that created for you. Any business cards, if you have a website and it needs refreshed, or you don't have a website, we can create and manage that for you. Any online newsletters or newsletters you'd like to have mailed out, and social media advertising is so big right now. So any of you are familiar or have Facebook and you see all the advertisements there and you like to know how you can get out your name and your agency's name, we can do that for you. Again, just give our creative team a call and they'll be more than happy to assist you with that. They also, if you haven't been to our website, they keep our website nice and updated as well. And our website address is www.iamsinc.com. And on that website, whenever you call and you say, gosh, Sandy, I need a term quote, or I need a UL quote, or I need an application for XYZ company, this is the exact website we go to. So you can run quotes from here. You can pull forms. There's current industry link and news. If you want to know who the top 5 MIGA annuity carriers are, you're able to pull that up from our annuity grid. You can look at our current webinar schedule and pull any of our recorded webinars off of our website. If you are interested in seeing what E&O cost, if you don't have E&O and you need to get some, or if you, again, are renewing and you want to know what a price is, you can go ahead and click on the link on our website and we can get that information for you. And then, of course, our sales resource library. What a great opportunity. That library has different 2 to 3 minute educational videos, whether you're looking at a key man or single premium life, or when to use an income rider for an annuity. You can pull off different sales pieces. You can pull off questionnaires. So it's a good tool for you to have. Anyone who is not registered with our website, I strongly suggest you get registered. It's available 24/7 to you. So again, if we're not here and you're with a client, you need to run a quote or pull a form, you're able to do that right off of this website. We have something. I'm going to put out a poll question here. By checking yes, you're just asking for additional information. When the DOL ruling came out here at IMES, we thought it was really important for agents to capture as much revenue as possible from their clients without their clients going outside of that relationship. And so we created an IMES Wealth Management division here at IMES. And the reason why we created that is, again, to try to increase your revenue and to capture as much recurring revenue as possible for you. Also it helps you with your client retention because, again, you're able to offer a full range of different products and services, and your client doesn't have to go outside of you for that service. And then you're also viewed differently by your clients. You're viewed as a fiduciary. If anyone thinks the DOL ruling has gone away, it has not. It is ever changing. We'll get you out the most current information if you check yes. If anyone has a Series 65 and they're thinking about transferring, check yes. We'll get you out that information. If you don't have a Series 65 and you're thinking about getting one, again, check yes. We'll get you that information out. Or if you're not interested in getting a Series 65, but you really have interest in capturing that revenue, again, check yes. We'll get you out the information and make sure we answer any questions that you may have. So we also have something called a Life and Annuity Academy. Geez, this is industry recognized. We're so proud of this. We have 3 to 4 a year. We have one that is closed coming up March 13th through the 15th, but we also have another one coming up May 8th through the 10th. And we pay for all the expenses on this, from your airfare, lodging, meals. Close to 1,000 agents register. We choose between 35 and 40, and it is a jam-packed 2-day training event. We have agents from all over the United States, and we go over different sales ideas and strategies. You know, indexed annuities, we unravel them, and when's a great time to use them, when's a great time to put on an income rider. We go over different industry threats and trends and how to overcome client objection. You know, any seminar systems and what works best in your area, whether that is cookies and coffee in a library or whether it's a more formal sit-down dinner seminar. Large life case marketing with single premium life, infinite banking or that private financing, key man, buy, sell. We go over different insurance concepts, wealth transfer tools, software tools. Again, what an opportunity at our expense to have you meet agents from all over the United States, talk to them, find out what plans they're using that work. We fly in top producers as well that cover different areas, whether it is income with annuities or single premium life or helping protect from Medicaid spend down. You know, great opportunity. Check yes. We'll get you out the information. You're not signing up for anything. We'll, again, send that out, answer any questions that you have, and see if it's just a good fit for you. Our next one, again, is May 8th through the 10th. So we'll be happy to get that information out. So in addition to the different great commissions that agents receive from our carriers as well as their incentives, we here at IAMS thought it was really important to offer an incentive of our own for agents and their guests. And so we have a 2019 Marketing Summit. That is August 25th through the 29th in beautiful, sunny Naples, Florida at the Ritz-Carlton. So if you have all the snow like we do here in the Midwest, this just sounds so amazing, especially right now. We want as many agents there as possible, so we have long invitational periods. They start January 1st, 2018 and go all the way through June 30th, 2019. If you and a guest would like to attend, the only way to attend is to make sure that you're contracted and writing and placing business with us. And you can do that with a combination of $3 million of annuity premium, $1.5 million of Med Supp, $2.25 million of single premium life, $250,000 of life target premium, or you can do $600,000 of long-term care premium. Again, any dollar or premium that is being placed and counting for this trip can also count for possibly that other carrier's trip as well. So I would love to see as many people there as possible. Any questions on that? Of course, I'll make sure to get those answered for you. Right now, I'd like to turn it over to Gary Voith, great friend of IAMS, with him and Baltimore Life. Great information he's going to go over. So Gary, if you'd like to take over, that would be great.
Absolutely, Sandy, and happy Friday, I should say. Happy Friday to everyone. Thanks so much for participating on a Friday, and hopefully the weather's improving a little bit where you are now, like it is here today. Hope you have a great weekend. But today we're going to spend a little time talking about Baltimore Life's tax-efficient asset transfer program. And during the session today, we'll be featuring two of the products in our portfolio, our single premium whole life product and our generational legacy product. Both of these products are really designed for your senior clients in mind who have what we like to call some leave behind money, money they don't need to live on. They simply want to leave it behind, creating a legacy for their family and increasing their estate in a tax-efficient way through the use of life insurance. So no matter whether you have money coming from after-tax cash funds like CDs, money markets, mutual funds, or 1035 life-to-life product exchanges, or you have money coming from annuities or qualified plan funds, we have a product that is set up to accommodate those situations for you. So in today's session, we're going to be talking about those two products. So let's talk a little bit about the landscape out there for asset or wealth transfer. It's huge. About $1 to $3 trillion in wealth is being transferred each and every year, and that projection is anticipated to happen each and every year between now and the year 2052. We know that about 55% of your client's wealth is being moved along to their family members. About 16% of that wealth is being moved along to their favorite charities. So yes, 71% of your client's wealth is moving along to people and organizations they know and love. The question is, are they maximizing the amount of money they're able to pass along? And are they really doing it in the most tax efficient way? Well, the first product we'll talk about is Generation Legacy. And this product is designed to help you facilitate the transfer of funds not needed for daily living, but single premium funds that are coming from either non-qualified deferred annuities or other qualified plan funds, such as 401ks, IRAs, 403bs, and the like. The goal, as we said, is leaving an estate for heirs and charities in a tax-efficient way through the use of a life insurance vehicle, and of course, increasing the estate value through the use of a single premium concept. The issue age for our Generation Legacy product is 60 through age 80, and this product will allow you to write a single application with Baltimore Life, and by writing that single app, we're going to issue two products: a single premium immediate annuity that will receive the transfer of the funds, along with a limited premium payment whole life product. Over a period of 7 or 10 years, as you'll see, that SPIA is going to pay up that life product and continue to provide all the benefits that we're looking for to help that family leave a legacy. Simplified underwriting is available on this product through 4 tables. We'll talk about that, as well as our automatically issued accelerated death benefit rider that's available in almost all the states. This accelerated death benefit rider obviously can provide living benefits to a client at a time when it's needed most. So what's another wrinkle that we've added a little over a year ago now with our Generation Legacy product? Well, we found that we are our agents are running into married couples out there, that you might have one spouse who is healthy, insurable for life insurance, and another spouse who maybe is not healthy, but has significant funding in annuities and qualified plans that aren't needed for daily living, and knowing that they might be closer to end of life because of their health condition, are looking for ways to pass those funds along effectively. So as a result, we've created the spouse option for Generation Legacy. That means that we have one person, the healthy spouse, getting issued for the life product through 4 tables, and the unhealthier spouse providing the funding to the SPIA that's going to pay the premiums on the life product on an annual basis over 7 to 10 years. The way this is set up now is that once you set up that funding from the unhealthy spouse, basically, even if the spouse dies, the SPIA is going to continue paying premiums on the life product. So essentially, the annuitant or the unhealthy spouse will waive their contingency to the right for the right of the beneficiary to commute those SPIA payments to a lump sum payout at their death. Those SPIA payments are going to continue paying the life insurance until the life product becomes paid up on the healthier spouse. So it's a good way to, if in situations that come up, to be able to accommodate this situation for you with our spouse options. So take a look at that when you come across that particular circumstance. So what about the qualified plan market? We know there's about $2.7 trillion of in-force for deferred annuities out there. About 65% of that money are in tax-qualified employer-based plans, and about 35% of the money are in those non-qualified deferred annuities that you're probably selling a lot of. As you well know, a significant share of those annuities that people are purchasing, they're simply being transferred to the next generation. We know annuities are great products, they're great accumulation vehicles on a tax favorable basis, But if you're not planning to use it as income, you're losing one of the legs of the stool, right? Of the three-legged stool: accumulation, tax efficiency, as well as an income generator. So if they're simply looking to pass that money along to the next generation, there could be a better option for them. As we know, with qualified funds, there is an RMD that kicks in at age 70 and a half. And of course, when the annuitant dies with that annuity product, they're simply going to be passing the tax along on the gain to their survivor, which more than likely is in a higher tax bracket. So there's absolutely no disputing that annuities are great products. But the question is, are they really the best products to die with? Or if the client's simply wanting to pass money along, we feel there's a more effective way that they can do that, and that is using our Generation Legacy product. So let's look at it conceptually. Think of Generation Legacy, a gift your client's trying to pass along to the next generation. And inside that gift box, you're going to help facilitate the transfer of money from annuities or qualified plan funds. Now, over a period, by writing a single application, we're going to issue two products: a SPIA, which will allow you to transfer the money into the SPIA product that's going to fund the life insurance, as well as with that app, we will issue a limited premium payment whole life product. Now, over a period of either 7 or 10 years, depending on the issue age of the client, Baltimore Life will make automatic annual premium payments from the SPIA to pay premiums on the life product. Nothing for the agent to do, nothing for the client to do. This is an automatic process that's administered by us. So what dictates that payment period? And it is the issue age. If a client's 60 to 74, we'll issue a 10-year payout on the SPIA along with a 10-year paid-up life product. If they're 75 to 80, a 7-year payout on the SPIA along with a 7-year paid-up life product. But here's where the benefits really get rich. We know that anywhere along the way, as the policies enforce, if the death occurs, that the life insurance is going to pay a death benefit that's greater than the single premium paid. That's a given. But with the Generation Legacy product, in addition to the life insurance benefit being paid income tax free, the survivor, the beneficiary, will also receive the remaining payments from the SPIA not used to pay that life premium. So that certainly is a great way to bring everything together for your client, where they're getting both as at an early death. At the end of the 7 or 10-year period, the gift box is basically complete. The life insurance is now fully paid up. The SPIA goes away. It's already done its job. The life insurance continues to provide an income tax-free death benefit greater than the single premium paid, cash value growing on a tax-deferred basis, and yes, the accelerated death benefit riders we'll be talking about. So just to sum up, issue ages are 60 to 80. We base our pricing on current age or age at last birthday. Now, the reason this is important is that you're going to be transferring money from other products and institutions. That transfer process may take 20 to 35 days. We will issue the policy based on the age your client is the day we receive the funds. Now, the minimum premium to get this started is only $5,000. How many people do you know out there that have multiple annuities that have been on the books for years with various maturity periods? If their plan is only to let that money roll to the next generation, they'll be perfect prospects for this product. The maximum, by the way, the average premium we see on this product, even though the minimum is $5,000, is about $60,000 to $65,000. That's the average premium. The maximum face amount that we will issue based on the single premium paid is $450,000. Now, we do have 2 underwriting classes, non-tobacco or tobacco. And within those underwriting classes, we'll issue any risk, standard through table 4, using our simplified underwriting process. And we'll talk about the simplified underwriting process a little bit more in a moment. Cash values, they accumulate in the life insurance on a non-participating basis. Partial surrenders, you can take partial surrenders from the life insurance policy, and they're permitted after the life policy becomes fully paid up. That's that 7 or 10-year period. Loans, they're available at any time contractually at a maximum interest rate of 8%. So now let's talk about the accelerated death benefit rider. Truly a way to provide living benefits, but keep in mind this is not or should never be sold as a long-term care policy. The best approach to a long-term care need is certainly a good, robust long-term care policy, but as we know, most seniors cannot afford long-term care insurance. So isn't it nice to know that you can accelerate life insurance benefits through such a rider? There are 3 health event triggers that will allow you to accelerate the life insurance benefit where the riders are attached. They are terminal illness, confinement to a qualified nursing home facility, and in situations of extended care, home health care, and adult daycare. Now, this can truly provide liquidity to that life product death benefit, and the rider, the availability of accelerating, happens anytime after issue. Now, once you decide to accelerate the benefit, a lien for the amount of money that was taken will be a lien against the remaining death benefit, and that lien will accumulate at an interest rate of 8% per year prior to death. I'll show you how that calculation works in a moment. The maximum face amount, the maximum amount that can be accelerated, I should say, is $250,000. The minimum is $5,000. But here's the good news: this benefit is paid out once. It's paid out in a lump sum, and these are unrestricted funds. So, you know, these funds can be used for whatever reason your client deemed needed. So let's take a look at the definitions of these health event triggers and the maximum percentages of payout. The first one is terminal illness. Client needs to simply be diagnosed by their doctor as terminally ill with a life expectancy of 12 months or less. And in this case, they can do a maximum acceleration of 75% of the face. The second rider covers both qualified nursing and extended care situations. The maximum accelerated amount is 50% of the face. And to qualify under qualified nursing, they need to simply be diagnosed as chronically ill, confined to a nursing home continuously for 90 days, with the expectation of a permanent confinement. For the for the extended care situations, again, they need to be chronically ill, have been so for 90 days, but now they're required care provided by either a licensed home health care agency or a licensed or state certified adult daycare center. Here again, they can accelerate at 50%. Now, there's about 7 states in the country that have different terms to this rider, specifically along the lines of the accelerated percentages. So, for example, in Pennsylvania and Indiana, those percentages are at 65 and 40 instead of 75 and 50. Our state approval charts out on our product toolkits will show you those state variations as needed. So these riders are designed to be able to pay cash now, but also provide remaining death benefit in most every situation. So what do we mean by chronic illness as it applies to the nursing home and extended care situations? Well, if your client satisfies either of these definitions, we consider them to be chronically ill. The first one is they can't perform 2 out of 6 activities of daily living that you see on the screen. But maybe they're okay on their ADLs, but they could be suffering from a severe organic mental illness such as Alzheimer's or dementia. In either case, we consider them to be chronically ill. So let's look at an example of how the lien process works on this acceleration. We're going to assume a client with a $100,000 face amount, and we're going to say they're terminal, so they can accelerate at a maximum rate of 75%. So if they do that, they get a cash payout of $75,000. We do add a $100 service fee for the transaction, so the lien is established at $75,100. Now, if they were to die immediately after taking that money as an accelerated benefit, no time for interest to accrue on the lien, the remaining death benefit would be calculated by taking the face amount less the original lien, giving you a life insurance death benefit of $24,900. But the more practical approach is this one, and that is where they got their cash up front of $75,000 and they died 1 year later. So now the remaining death benefit is the face amount less the original lien minus a year's worth of interest, giving you a remaining life insurance benefit of $18,892. So in this situation, this client would have to live 4+ years for the interest to outrun the remaining death benefit. Pretty unlikely that that would occur. Now, could this rider, and technically it's 2 riders, one for terminal illness and one for nursing and extended care, could they terminate? Well, technically they could, because the riders are attached to the life policy. And if you came to us, or the client came to you 2 years after the policy was in force, and they said, hey, remember that $100,000 I gave you that it was leave behind money? Well, I need as much back as possible. You could technically decouple the arrangement, cash out the life policy, which would end the riders. Of course, there'd be very little cash value in the life policies. When we would cash out the life policy, we would also pay the remaining payments from the SPIA to the insured as well. Now, at death, of course, we pay a death benefit and the riders would end. And the other situation would be, what if you accelerate, let's say, under the nursing home provision at 50%? Well, once you accelerate once, you can't accelerate a second time. You can't come back later and say, well, now I'm terminal. Can I pick up another 25%? It's a once and done. The other scenario I kind of painted before, and that is, what if the client who was terminal and expected to live 1 year or less, let's say they live 4+ years or 5 years, and the interest outruns the remaining life insurance benefit. Well, technically, the life policy would end, and that wouldn't be the best situation. That's why in the contract we had the provision for the policy owner that can repay all or part of the lien at any time, just to keep this qualified as a life contract. Even though you accelerate, there's still some cash value accumulating in that policy on a tax-deferred basis. And the other thing to remember about acceleration, if you have an active policy loan on the policy prior to the acceleration, you cannot accelerate. It can only be a loan or a lien. You can't have both going on at the same time. The last thing to tell you is that no matter whether you're dealing with our company's benefit or any company's similar benefit, you should always tell your client to consult with their tax advisor. So here's a quick review of that rider in a potential situation. Here's a female 70, non-tobacco, who's got 50 grand, let's say, coming from an annuity. We will issue a life policy at $78,000, nearly $451 in face. So she's at issue, increased her estate by $28,000, nearly $451. Keeping in mind that if she dies in the first 10 years, the remaining payments from the SPIA would also be paid. But let's look at that accelerated payment if she accelerates under one of the 3 health event triggers. What you're seeing on the screen obviously is real money to a senior at end of life, which truly can provide them cash at a time when they need it most. So it's a powerful rider, and it's certainly a great thing to sell the sizzle as you're making that sale with your client. So what's another tax efficiency of this program? Well, we feel it's the way that you can roll the money into a qualified SPIA to pay for the life insurance. So, you know, no matter whether you're rolling money from an annuity where there's a basis and a gain, or if you're rolling money, let's say, from an IRA where it's all gain, right? It's never been taxed before. Eventually, Uncle Sam is going to get, you know, their tax on the gain of the qualified funds. But because you're rolling the money into a SPIA that's going to pay for life insurance, we're able to help facilitate for the client the spreading of that tax over a 10 or 7-year period. That's the period of time that we're going to be paying the life insurance premium. So your policy owner will get a 1099 each year for the taxable portion of the money that they're rolling over. Keep in mind the SPIA payment that we make to the life product does satisfy the RMD rules, so they don't have to worry about that calculation. The other thing to tell you is that we know the life insurance is paid income tax free, but what about the remaining payments from the SPIA that would be paid at death? Well, the beneficiary would get a 1099 on the taxable portion of those death proceeds from the SPIA that had not been taxed before. Now, the default method that we pay out a death benefit from the SPIA are annual payments. So if there's 7 more years left on a 10-year payment stream, then they get 7 more annual payments. But they could say, you know what, I want a lesser commuted lump sum. And in that case, we will do that as well, but they'll still get a 1099 based on the taxable portion. One more thing on the tax side, and that has to do with the application. Because we're dealing with qualified funds, we have to ask the question, do you want us to withhold tax from the money you're rolling over? We have to, by reg, ask that question, but we cannot comply with that for this product. It's not designed that way. So we would not be able to give you all the face amount that we're offering. So as a result, we would have to send everything back to you. So make sure you check the box on the app that you do not want tax withheld from the money you're rolling over. So now let's take a look at premiums to death benefits, and I want you to think about those clients out there that, let's say, have annuities or other qualified plans that really, are trying to pass along a legacy. Here's the 65-year-old with 50 grand, and because they're 65, we're going to issue a 10-year payout on the SPIA along with the 10-year limited premium payment whole life product. For the male, the face amount, $77,361 and change, and for the female, the face is $87,031 and change. Now, what did you just do for this female 65? You've increased her estate by over $37,000, keeping in mind that if she dies in the first 10 years, the remaining payments from the SPIA would also be paid. Now, she may say to you, Sandy, what if I have the money in the annuity and I'm making 3% interest on that money and I'm in a 25% tax bracket? Wouldn't I be better just keeping it there? Well, it would take her over 19 years just to match the $87,000+ that would be paid out from the life insurance benefit on an income tax-free basis. What about the 75-year-old? A little shorter life expectancy, but the numbers still look good. Because this client is 75, we'll issue a 7-year payout on the SPIA, along with the 7-year paid-up life product. For the male, the face amount $61,516 and change, and for the female, the face amount just over $67,000. So even at 75, you've increased this lady's estate by over 17 grand, the gentleman's estate by nearly 12,000. Again, knowing if they die in the first 7 years, the remaining payments from the SPIA would also be paid. I tell you, I'm a licensed agent myself, sold this product and certainly marketed it with our agents like you for many years. People love it. Once they understand the concept and then they start seeing their numbers, they love it. And those people certainly that buy, and sometimes even if they're not buying, they're going to be referring you to other people. They talk to their friends and family. They see this as a great way to pass along wealth in a very tax-efficient way. So please ask for referrals early and often. This is a ledger which you can produce a full proposal from our Secure Solution Illustrator software on our agent site, or you can produce this ledger using our mobile link software that I'll talk about in a moment. But this ledger gives you kind of a feel for the ebb and flow of the cash. Here's the female 70, non-tobacco, and with that 50 grand she puts in from the annuity, she has a cost basis of $40,000. That was her money. You can see in column 3, the $50,000 going in premium to the SPIA. And from that SPIA, we'll make an annual premium of $5,570 a year to pay for the life insurance. That's an automatic payment, nothing for the agent or the client to do. Out of that $5,570, nearly $4,000 is excluded from tax, and based on the interest factor over 10 years, the estimated taxable income that they'll get the 1099 on annually is about $1,571. You see further in the ledger, at the end, last column, the death benefit of over $78,000, and in the next to last column, the commuted lump sum from the SPIA if death were to occur early. So this really will help cement the sale by giving the client a presentation of their numbers, and they can really see the impact that it's going to have on their estate value. What about applications and forms? We try to make this easy. In our application and forms package, which you can find in our product toolkits on our agent website, you'll answer a couple of quick questions and it will automatically present to you all the forms that you need. You can print them, order them from us, email them to someone. All that's available to you. Certainly, as you're getting started with this product portfolio with Baltimore Life, I would highly recommend you using our friends at IAMS. They do a fantastic job of helping you with case consults and getting you well positioned to go out on that appointment to be successful and make the sale. Another thing you're going to find in our product toolkit are just a number of other great marketing tools out there. I'm going to try to cover a few of these with you before we end the session today. So the other product we want to talk about is our single premium whole life product. Same basic concept. Someone wants to increase the estate, leave a legacy, do it tax efficiently, but there's some other key differences that we're going to point out here. The first of which is the source of funds. Still single premium funds not needed for daily living, but for this product, our single premium whole life product, you're going to be looking for after-tax cash funds from CDs, money markets, mutual funds, and where appropriate, 1035 life to life product exchanges. Another key difference is the issue ages, 50 to 85, little broader issue age because we are working with after-tax cash funds. This product also has a little wider table, simplified underwriting table of that's available to you. We go through table 8. We also automatically include our accelerated death benefit rider. This rider is a little bit different in terms of how it was filed. It was filed before Generation Legacy. And this one will give you, instead of a lien approach, a little different way to extract money if you're accelerating or exercising that benefit. And I'll show you how that works. So the issue age, again, 50 to 85 based on current age or age at last birthday. We have 2 tiers of underwriting. Level 1, again, which is standard through table 4, same as you had for Generation Legacy. And level 2, which is tables 5 through 8. Again, non-tobacco or tobacco within those underwriting tiers. Minimum premium to get started, it's only $5,000. How many clients do you have out there that have multiple CDs sitting in the bank, as many of our seniors do? They compartmentalize funds. You know, these are the 5 CDs for my kids, for my grandkids, for my church when I pass, and the kids kind of know that's how the estate's to pass. What about the client who says, Sandy, I know, maybe Sandy was trying to sell some small face amounts of life insurance to cover final expense. And the 70-year-old lady says, well, Sandy, I really don't need life insurance. I have a burial account set up. Well, that means one of 2 things to me. It either means they have a prearrangement at their local funeral home, or they might have a $15,000 CD set up at their local bank. Well, here's how that role play might work with the 70-year-old. Mrs. Jones, you're 70, you're going to live many more years, and costs, of course, are going to go up. What if I was able to show you a way to take that $15,000 you have in the CD and provide your family with nearly a $25,000 income tax-free death benefit? Oh, by the way, if you became terminal in a nursing home or an extended care situation, you could get at some of that money as a living benefit for whatever reason you might need it for, and we can set it up so that you still have some remaining life insurance. That's called the burial account concept, and I can't tell you how many agents get started selling single premium in this way, and once they figure out how lucrative it is, they start doing better fact finds and find the bigger premiums. The average premium we see on this product, by the way, is about $30,000 to $35,000. The maximum face amount, it's expressed in terms of the maximum net amount at risk, and that's just the difference between the face amount we issue and the premium paid. That gap is the net amount at risk. Cash values, they do accumulate again in this product on a non-participating basis, but here's another big difference. Partial surrenders, they're permitted starting in the 2nd policy year within limits. So if they need some cash, you could do a partial surrender in year 2 at 10%, year 3, 20%, 30% in year 4, 40% in year 5, and from the 6th year forward, 100% of the available cash value can be taken as a partial surrender. Loans, they continue to be available by contract at a maximum rate of 8%. So what about that accelerated death benefit rider? Same 3 health event triggers, same fact that you could accelerate it anytime after issue, same idea that the benefit is paid once in a lump sum, and this can be used for whatever reason deemed necessary, unrestricted funds. But here's the difference. With this one, you can say, you know what? I want a full acceleration. Give me as much cash as I can possibly get, and I don't want any more life insurance. You can do it that way, or you can say, you know what? I want to do a partial acceleration. Out of $100,000 in face, let's leave $25,000 in paid up coverage and accelerate the other $75,000 at the rate and get the cash as a living benefit. That's called a partial acceleration. So let's show some quick examples of that. Terminal illness, same definition to qualify, 12 months or less to live, but now the client can accelerate at a maximum rate of 95% less a $250 admin charge. So if they had $100,000 in face, they would be able to get just short of $95,000 in cash, life insurance ends, or do a partial acceleration, leaving some life insurance and accelerating the balance. Nursing home confinement, same definition to qualify, but now because they're going to live a little longer, the maximum acceleration rate is 90% less the admin charge. For the extended care, home health care, and adult daycare, because they're going to live longer yet, the maximum accelerated rate is 80% less the $250 admin charge. Now, people say, well, why is that percentage going down? Well, it's basically because as you're going to live longer, we've got to accelerate the payment out that much sooner prior to death. So with the generation legacy riders for accelerated death, we use the Lien approach. With this one, we use the approach that I'm explaining to you now. Every company has some method, usually it's the Lien approach, to pay out this type of benefit. I like this one because it gives you some flexibility to do a full or partial. Same definition for chronic illness, 2 out of 6 activities of daily living, or to clients suffering from a severe organic mental illness. Let's look at premiums to death benefits. 65-year-old non-tobacco for 50 grand. Level 1 underwriting, nearly 82,000 in face for the male would be issued, and for the female, just short of 93,000 would be issued. But for this product, let's not forget, you got a tier 2 or level 2 of underwriting, which is table 5 through 8 types of risk. And what you're going to find with all ages and genders is that the face amount difference between level 1 and level 2 is about $5,000 to $6,000 less. Not a bad reduction considering that tier of underwriting is available to you. So for that 65-year-old lady who's got money sitting in a CD with very little interest on it, getting a 1099, she just wants to pass it along, you've increased her estate at issue by nearly $43,000. If she was making 3% on her money in a 25% tax bracket, it would take her 28 years just to accumulate that nearly $43,000 you increased her estate by. Let's keep in mind the life insurance benefit of nearly $93,000 is going to be there to be paid income tax free. 70-year-old, numbers still look good, don't they? Level 1 underwriting for the 70-year-old with 50 grand in premium would be just short of $74,000 for the male, just over $82,000 for the female. And again, at level 2 underwriting tables, we would be about $5,000 to $6,000 less. Same story on forms. Go to our app package, get all your forms, call your IAMS friends and our friends too to get help on that if needed. And then we have lots of other great marketing tools in the toolkit. So this is what I really want to get into with you, and this is the icing on the cake for this program, and that is our point of sale underwriting process. We have a great product, extremely competitive, talk to IAMS about the contract, but at the end of the day, isn't it nice if you were at point of sale to be able to get an immediate underwriting decision? Well, in fact, we have point of sale underwriting. So once you finish the app, you're going to pick up the phone with your client there in our call center and do about a 12-minute interview where we're going to be asking all the same health questions you completed on the paper app you're going to send in, and we'll get the client's permission to pull up the MIB and the prescription drug history. That way we'll be able to do live underwriting on the spot and give them an underwriting decision nearly every time. If we can't, it's going to come very quickly once our underwriters assess, but it usually is close to 100% of the time you're going to get the immediate decision. After the underwriting decision is rendered, we don't give that decision to the client, we give it to you. You're the one that's going to communicate the underwriting decision to the client. We'll also give you a confirmation number that we ask you to write on the first page of the app you're going to submit. Once you're finished with the case, make sure you send us all the forms, no matter what the underwriting decision. And on the instruction sheet, and by the way, when you print out our app package, all the instructions on doing this interview are there. The phone number that you see on the screen, our hours. We support English and Spanish languages. Other languages are available upon request. We do have TTY services in English and Spanish for your hearing impaired clients, but the interview must be done within 5 days of completing your app. Now you may say, well, what if I do an app on a Saturday or an after hour situation? What do I do? No matter when you complete the app, pick up the phone, call the call center, and when prompted by voice cue, leave your name and number, your client's name and number, and a date and time you want us to call them. We'll call the client. You don't have to be present. Get the interview done, and again, call you back with the underwriting decision. We will not give that decision to the client. You'll be the one that will deliver that news to your client. Obviously, if you call during normal hours, everything gets done at the same time. How do you pre-qualify the apps? Well, we do have an app for each product, and the reason we do is for Generation Legacy, we have one tier of underwriting. So as a result, we have one section of medical questions, a Part A. If you get all no in Part A, MIB and drug history, height, weight looking good, we're going to issue that product, which is standard through Table 4 types of risk. With single premium whole life, we have two tiers of underwriting, so we have two sections of medical questions, Part A and Part B. Think of your Part A questions as knockouts. If you get a yes in Part A, it means your client does not qualify through 8 tables of underwriting. But if you're all no to Part A and B, we're going to issue Tier 1, and that assumes the MIB and drug history and everything else looks good. If you're all no in Part A and one yes in Part B with everything else looking good, we'll issue Tier 2. So with that, I'm going to transition in the time we have remaining and finish with a little bit of information I think you're going to like, and that is about some of our marketing. I've talked a little bit about the product toolkits that are out on our agent site. And in our product toolkits, let's get there, you'll see this is the first page of our agent website. These product toolkits, when they open, will give you really just the wealth of everything you need to sell and market our products out there. The application and forms package we've been talking about, state approval charts, training, and just a number of other things. Let's talk about a few of those things right now. This is the one I think you really want to write down and act on, because this is basically like having an electronic agent guide in the palm of your hand. It's our mobile link. Just go on a web browser to mobile.baltlife.com. When you get there, save it. Let's probably on your phone, and it'll create a nice little shortcut on your phone with the Baltimore Life mobile link icon. When you open it up, you now basically have an electronic agent guide in the palm of your hand. It'll give you the product information, the underwriting guidelines, and more importantly, a rate and value calculator. Keep in mind that both of our products we just showed you today are non-illustrated products. Signed illustrations are needed, so you can get all the values you need to sell right through mobile link. So check that one out. I think you're going to love it. We have point of sale presentations out there for you, so you can make sure, not after you've done the good fact find, that the client understands the concept of asset transfer, features and benefits, those types of things. That's going to be our mobile link, our point of sale presentation software. So take a look at that. I'm not going to go through all the screens just for sake of time. We have good fact find tools out there for you. This is one of those fact find tools. Hopefully you have a good fact find tool, but this is particularly designed for the asset transfer market, where you can list the client's current liquid assets, make sure they have enough monthly income, and then have those key dialoguing questions that you should be asking. We also have a document out on our agent site called Single Premium Sales Ideas. We won't have the time to go through these today, but I have talked about many of these during our session. Each of these sales ideas are outlined in detail. So when you read the document on the site, have a blank sheet of paper alongside of you. You're going to start thinking about people you can immediately go out and see with some of these concepts. We have customizable marketing flyers, which outline the concept of asset transfer, the features and benefits of a solution, and then you can customize it with your contact information. We have this nice Excel file tool that you can sell with single premium whole life, where you can show, wait, you're going to put so much money in a CD at a certain interest rate and a certain tax bracket. Let's compare that against single premium whole life to show you what the net effect is of that CD as compared to the income tax-free death benefit of single premium whole life. You can download that Excel file right to your computer. We have white papers, third-party articles, all that's out there again in the product toolkits. One last thing I want to promote, Sandy, before I send it back to you is, first of all, I was just down in Naples at that Ritz-Carlton. You guys are going to love that trip. Make sure you sign up for that one. But hopefully, you're going to do a lot of business with Baltimore Life and come to Dublin, Ireland in 2020. We've got a fantastic conference scheduled for our leaders next year, and all it takes to qualify for you and a guest, all expenses paid, is $750,000 in single premium. $750,000 in single premium will get you an all-expense paid trip for you and a guest. It's going to be a fantastic trip. We hope to see you in Dublin next year. But I want to thank everyone for participating today, and more importantly, to thank our IAMS partners. My gosh, we've been partners with IAMS for so many years, and every time I see them do their front presentation before I come on, I'm like, wow, I'm a licensed agent, but if I was a producing agent each and every day, that's the IMO I want to go to, because they do so many great things for their agents. And I'm not just saying that, believe me, I've worked with IAMS for a long time, and they'd be the go-to shop that I would go to as an independent. So thanks so much, Sandy and IAMS. Thanks, everyone, for participating today.
Yeah, thank you so much. What I'm going to do now is just do one last poll question and answer any questions that you have. So the last poll question would be, would you like to get contracted with Baltimore Life? If you're already set up on our paperless contracting system, just check yes, and we'll get you contracted. If you're not set up, we'll get you out that paperwork. And questions, Gary, they want, we have an agent that wants some clarification when on the Generation Legacy. Are they able to take any accelerated death benefits while that internal SPIA is being paid out?
Yes. The accelerated death benefit rider is active anytime after issue.
And then once they are utilizing that accelerated death benefit, if they take the full accelerated death benefit, there's no additional death benefit left to pass on to beneficiaries, correct?
Correct. Yeah, once you do a full acceleration, but no, with Generation Legacy, it's a Lien approach. So keep in mind, there's a maximum rate it can accelerate, 75 or 50%, depending on the trigger. And then the Lien approach is such that they're going to have a lien against the remaining death benefit, and that's accumulating an annual interest rate of 8% a year. So there is a tail to that, where the final death benefit, the remaining death benefit, will be paid out once the client dies under that Lien approach. Whereas with single premium whole life, you might be confusing it, that you can either do the full acceleration, once and done, no more life insurance, I got as much cash as possible, or do a partial acceleration where you keep so much in paid up and you accelerate the balance.
I also wanted to let everyone know with Baltimore Life, it is such a quick turnaround. You literally get that approval on the phone. You submit the application. If everything is placed and paid on a Wednesday, you get commissions on a Friday. So great turnaround, great company. Wanted to remind everyone that I will be sending out a recorded version of this webinar. So you'll have that later on this afternoon. Again, my name is Sandy Vicanti. I head up the Life Division here at IAMS, and I'm just so appreciative of everyone taking their time out on a Friday after a long, busy week for, wanting questions and showing interest in a great company and two great products. So Gary, thank you so much. Everyone have a great, safe, healthy, and happy weekend. Thank you. Bye-bye.